Hi guys, this is Lee with the Market Sense for the week of April 23rd, 2019. The charts in this presentation are provided to us by Gettess, their Trade Navigator software, and this is one of the charts we're looking at here. It's a weekly bond market chart. After the breakout to the upside from this sideways pattern, we've dropped back down, and this low here is kind of like perfectly set right along the highs of this sideways. That's often very good support. The only thing is they haven't really done much with it. They've gotten awful quiet, and this week so far is inside to the previous week. Now, this is not terribly surprising because we have a big GDP report Friday, and they're looking for something just north of 2%. Anything much higher or much lower than that could cause a rather violent reaction in this market in either direction. And so I kind of expect them to stay relatively quiet until then, but I would have a little bit of an upward bias, and that's because we came into the week looking for support potentially at around 144.08, which they seem to have held. And the earliest resistance is around 147.12 or so, right in this vicinity here. And so that's a good possibility that they would go up to that point. And they could go to 48.14 or, the upper moving average. And a breakdown to the mid-Keltner here, which is around 142.10, that wouldn't be the worst thing in the world. Obvious support there and kind of in the middle of the old congestion, that would be fine too. But at this point, it's just a matter of seeing, can they turn back up from this good-looking support here? And if they can, then, we'll see how high they can rally. But I would be willing to bet you that Friday's GDP report is the big key to what they do, and they may go higher before then, but I kind of expect them to be relatively quiet. Now, the one good thing here is that they have held up rather well while stocks were rallying strongly, so that could be a positive sign for them. And speaking of stocks rallying strongly, could we just take a minute and look at this overall chart? I mean, after this major breakdown and all of this volatility, we make this low at the end of last year. And just look, we have 2 weeks, one here, one here. Those are the only weeks with lower lows. That's it. It's just run right back up, and it's now within shouting distance of the all-time highs here. And I gotta say, I don't really think they've come all this way just to fail. I mean, they might, but I kind of don't think so. Just really impressive move, and a spike low like this, very high probability to get retested. They're not doing it now, clearly. That's long gone. And just very unusual price action, and nothing I can do but admire it, really. And this week we were looking at support possibly in the 28.96 area. They didn't quite get down there before rallying, and they've pretty much just blown through everything. What we're looking at now is potentially the old highs. Last September was 29.56. This contract, we're 15, 17 points away from that. It is interesting that we're that far away in the futures, and the actual cash S&P index is only about 4 points away. That's an interesting divergence. I don't really know what it means. I expect it'll just get resolved, but for right now, that's kind of fascinating. And the upper Keltner 29.67, these areas, the old high in 29.67, I wouldn't call these resistance. They're interesting targets to monitor just to see how strong they are. But I have no interest in selling them up here. I mean, they could roll over for sure, but from a probability standpoint, if you would really like to lose money, you just sell markets every time they make all-time highs. That's a great way to get your butt kicked. Won't be doing that. The GDP Friday could infect this market as well, but they look good. There's not much else to say. If you're not already long, it's probably too late, and maybe next week. So that's what we've got for you today. I hope you can find something profitable to get yourself